In further field business developments, the Federal Reserve has kept interest rates unchanged, holding steady in the 4.25% to 4.5% range. Now, despite growing concern over inflation and slowing growth, officials still project 2 rate cuts before the year ends. Moreover, new forecasts show inflation rising to 3% and economic growth slowing to 1.4% in 2025, with unemployment expected to hit 4.5%. Meanwhile, the outlook reflects increased caution as tariffs impact the broader economy. Fed Chair Jerome Powell emphasized patience, saying the central bank is in a good position to wait for more economic clarity before making any policy shifts.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. The unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.